please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
There goes the bell, and it is a third of a percent higher actually. 10,620 taken, 622 now, 623. This is 0.33% higher, and the Sensex opens 110 higher at this point. Actually opened 100 higher, now 110 higher. Again, a third of a percent, 35,135. And the Nifty Bank still struggling just a wee bit, waiting for HDFC Bank to complete its recovery. That stock is starting about 12 rupees down. So we won't talk about Nifty Bank, but the mid-caps are absolutely running away. It's about 1% higher, 135 up on that index itself. And I'm sure Sonia has a battery of stocks to rattle off. Let me just tell you what's doing well in the Nifty. It's obviously the oil stocks. They have been beaten out of shape, and now with crude just inching lower, probably because of dollar weakness, you're seeing BPCL, HPCL and IOC up about 2%. In fact, BP and IOC are up almost 3%. Tech Mahindra again doing a little bit of recovery, but HCL Tech also showing some increase, 1.2%. Tech Mahindra, of course, had a bad day yesterday. Tata Motors also showing some short covering. SBI showing short covering. Tata Steel. All these are stocks that had a bad past 3 or 4 days, especially yesterday, and we are seeing covering over there. IT stocks, Tech Mahindra, Infosys in the green, as is Hindalco, Reliance. So I think it's, what is it, a 50 on 50 in the green? No, not quite. About 7-8 stocks in the red. Among them, Dr. Reddy's. And that at-risk launch is the reason why you're seeing a little bit of negativity in Dr. Reddy's. NTPC, Asian Paints, Hero Moto, HDFC Bank, Axis Bank. Titan, of course, are the stocks which are marginally lower, but Titan is, okay, not lower a great deal. 0.4 lower, 2 rupees down, so not much. It looks like that 200-day moving average is proving to be a bit of a support for that stock. But mid-caps rattle off 1% higher.
Absolutely. It's a really good opening, actually. So more than 1,000 stocks on the advancing side. We haven't seen this all week. By the way, 5% equity has changed hands on Mahindra CIE. So that's actually a big move that you're seeing on that stock this morning, up almost about 6-odd%. Volumes are very high, of course, because of that change of, 5% block deal that has taken place. HEG, Graphite India, both up almost about 5-odd%. Macquarie has a target price of 48.10 on HEG, which is much higher than where the current market price is. So keep an eye out on that. A couple of these consumer consumption stocks are doing very well today. V-Mart Retail is up almost about 3.5-odd%. Kaya is up almost about 4-odd% or so. Future Consumers also, I think I saw that stock well in the green. Delta Corp is seeing some trades on the upside, so up almost about 3-odd% over there. Two stocks that are in the news. One, of course, is Titan. Hardly any selling pressure there. I think just a sentiment overhang is what you're seeing. Now it's actually moved into the green. So, thank you very much. And then you have a couple of other stocks like, Interglobe Aviation, where there was a Credit Suisse downgrade that came in on Interglobe Aviation, but that stock too, defying that, up almost 0.3%. All in all, good opening for the market.
You know, market rarely gives full tosses. Today was a full toss on Titan. I mean, no-brainer trade. It was their first gap down you should have bought, and that's why, Sonia, I wanted to make that comment on Titan and the fact that it's at 52-week low and selling is done now, and it's a reason that it's underperformed because there was one overhang which was there. Some big investor was selling. That selling is now out of the way, and if this morning you've sold Titan, trust me, you've got trapped. But good opening. Ashwani, your thoughts on market opening and interesting stocks?
I think short covering has picked up. Bank Nifty a little subdued. This is the time to get long strongly on Bank Nifty, because once these private banks find buying back again, I think Bank Nifty should easily do 200, 250 today. So my sense is that this is a good strong opening which needs to be bought. Possibly for at least most of the today, you should have upside happening here. But focus on stocks which are the weakest, like BPCL, HPCL, Voltas, all kinds of PSU banks, etc. They will give you the biggest bang for the buck.
Yeah, it looks like IDBI is already doing that. It's up 3.5%. Today the IRDA is meeting. At 11 a.m. is the IRDA meet, that is the insurance regulator, and could take a view on the LIC purchase of IDBI Bank. Already Mr. Sriram has resigned as Managing Director of SBI. So it looks like that will be pushed. And then let us see whether there's open offer or whether SEBI gives. But that stock is up 3.3.
You know, I just want to make a point. Tata Steel is seeing huge buying right now. I think there's this BBC report that the Thyssen Group deal has been cleared and that union problem is now out of the way. And I mean, if that is the reason, that was a reason that Tata Steel stock, of course, had corrected. But if that union problem is sorted and now the deal is happening, that's what the BBC and a couple of other wires are reporting that the deal is through, and that's the reason that you're seeing that big move on Tata Steel right now.
No, actually, generally today, even the dollar weakening has led to a lot of metal stocks rising, as Manisha was telling us. So across the board, there is a green on all the metal stocks. I guess this is just a minor bit of short covering after the kind of selling that one has seen. Prakash, anything that's on your radar now?
Certainly, I have two stocks. One is Tata Steel, as you mentioned here, certainly looking good to me. And so is the case with Reliance. Reliance looks like it should pick up from here. And perhaps we can see even move to around 960, 970, 980 zones.
Okay. And Mitesh, sorry. Mitesh, anything fresh now, especially in the mid-cap space?
No, I have a large cap stock. In fact, just getting into a short trade on MRF. I think it broke down a pattern yesterday, giving a good pullback. So the risk-reward equation is quite favorable. I think around these levels, keeping a stop at 74,600, I would be comfortable shorting MRF. 72,000 remains my first target.
Okay, by the way, new highs for Infosys once again today, touching that 1300 mark. I think 1298 is where it went. Remember, as Nishchal Maheshwari was telling us, BFSI has suddenly picked up, as Accenture reported as well, and that will reflect in the further numbers for many of these companies. But Ashwani, what would the big call for the day be?
See, big call is, the worse the stock, the higher it will go. So maybe get into HPBP. They've been the most hammered. They should move up, and also Titan would have a strong day through the day.
Oh yes, Titan really is your stock of the day, and perhaps a big surge, apart from Tata Steel, of course. Gentlemen, thanks a lot for joining us for market opening. We'll, of course, keep coming back to you. Let's invite our market master for the day, Tushar Pradhan, CIO, HSBC Global Asset Management Company, is with us. Tushar, good morning. Your thoughts on the recent market capitulation, especially in broader market? You think there's more to go, or has that presented a good buying opportunity?
Yeah, I think if you look at the reason why the market seems to have capitulated is the fear that this trade war that is erupting is going to encompass, the entire globe, and there is going to be pretty much a lot of pain for most manufacturers. Typically, trade wars also lead to inflation, and I think that was the other worry. And if you have trade barriers coming up, then oil also becomes a little bit of an issue with the Iran thing and how the price of oil actually settles. So I think that is the principal reason why there was weakness all over. That also led to a pretty strong dollar. And in the event of a strong dollar, the vulnerability of most of the emerging markets comes to fore. There is a lot of worry about whether there will be a capitulation by the foreign investors in emerging markets per se. But I think as the events have rolled over in the last few days, it appears as if the actual impact of the trade war may not be as high as most people calculate. And I think there will be some tempering of these kind of extreme reactions as well. I think what is most important for investors in India to focus on is the earnings recovery, which is pretty visible in the last 3 quarters. And I think as the rhetoric or the news start to get worse, I think the situation actually starts to look more attractive. Because in the past few, I would say, periods of trading, or say even a couple of years, the rhetoric has been pretty positive, but the earnings have not been delivered. So it resulted in this valuation expansion. But I think going forward, you will see maybe if the rhetoric starts to get worse, but the fundamentals turn around, I think that's a much safer environment to invest.
Okay, good morning, Tushar. Good to have you with us this morning. Much of the market increase, market rise has been helped by the small investor, by the SIP culture. How has it been in June? Yesterday we had one of the fund managers telling us that while there has been no redemption, the incremental inflows in June were not as good as May. What's your experience?
Well, I think I don't have the numbers myself, but I think typically what tends to happen is when the SIP is sold or someone gets into a contractual agreement to say, let's put some money away in equities, he's largely coming in with the expectation of a rising market. And I don't think much of everything else on the longer term is something which is very evident at the start at least. So I think there is very naturally a reaction to say, oh, if it is not going up or if it is coming down for some time, then let me stop the SIP for a while. But having said that, we may have crossed over a period of maturity where we've seen increased interest in SIPs over the last few years, in fact. So I think the people who have been in the SIP program for over 2 or 3 years are not the ones who are going to capitulate. I think it's the newer ones, and rightly so, as you mentioned, the rate of new additions to the SIPs may actually see a temperance because they may not see, some sort of upside there. And with the interest rates going up the way they are, I think the alternative opportunity also might look a little bit more attractive because of the risk involved on the equity side as opposed to the fixed income side of the picture. So I think there is always going to be some give and take between asset allocations. But I don't think there is any alarm for the overall SIP book because I think that has reached a fairly critical level. And as I mentioned, this SIP generation has been not something recent. It has been building over the last 2 years or so. And I think those SIP flows are fairly secure. But as you know, the retail investor is always prey to news, and it is always going to be some reaction on the basis of some weakness in the markets, at least in the interim.
Okay. Tushar, good morning. So what phase of the market do you think we are in right now? Do you think this is the start of a bear market, or is this still the mature phase of the bull market?
Well, I would argue that from a fundamental perspective, the bull market has not started yet. If you look at how prices actually follow, they follow earnings. And in the last 2 years, earnings have not been delivered. Actually, the market has gone up in expectation of earnings growth, and I think which has been delivered fairly in the developed markets, especially in the US. So earnings growth has been extremely strong in the other markets. Liquidity has been high, and all of that has led to our markets also going up. But they have gone up without any corresponding increase in earnings. As we go in the next few quarters, I think we're going to see a significant increase in earnings. And if, unfortunately, the environment changes to kind of, not give the earnings the kind of due that lack of earnings in the past few years have got, then you will actually see a return to the mean in terms of valuations. And in that case, I don't think there is any reason for us to believe that there will be a bear market. At best, there will be some sort of, I would say, consolidation, so that it will consolidate at a time where earnings are rising and expectations of earnings rises in the future may not be that high. But as the earnings keep piling up, and we are hopeful that FY19 as well as FY20 is going to be very strong for earnings growth for the entire economy, I think that will be a time when people will actually have seen the elections behind them. They will have the environment a lot more clearer than what we are here. And I think that will be the second leg. But it is very difficult to predict the markets at all at any point of time. But I think if the earnings keep coming up, then clearly I don't think a bear market is in store for us.
Bear market, but Tushar, it was because of the expectation of these earnings that we saw this mammoth 2017 rally. Small cap index up 60%, mid cap index up 40%. Now we are seeing the give back period. You don't think the give back will continue irrespective of the earnings growth? Are there still bubbles and are there still excesses in the mid cap space and therefore more selling?
Yeah, I think it's an interesting point you make, Lata, but I think let me give you some facts and figures. The earnings growth for FY17 for the mid-cap index alone was close to 60%. Can you imagine this kind of growth? So the price rise that you're seeing in the following year is actually in anticipation of this kind of momentum of earnings continuing, which obviously is not going to happen. But it's not as if the 60% rise is out of nowhere. It is supported by a very significant earnings growth in the underlying companies. And the problem is that when we look at the market, we look at only the narrower index, the NIFTY and the Sensex, where the earnings delivery has been much poorer. But in the mid caps and the small caps, the earnings growth has been extremely strong. The question mark, of course, and I think there is validity in your point to say that, is this kind of momentum going to continue? Clearly not. But is earnings going to come down and go into losses? Not really. So I think it is more or less a tempering of the multiple rather than just the price that we see in the market going up 60%. The multiple of the mid-cap index is something that we have to watch carefully. And I think on the expected numbers that I can remember, it's about 19 times 1 year forward. And I think that is compared to the NIFTY, which will be between 17 and 18 times. So I think they're really, which will be between 17 and 18 times. So I think they're really not off the wall. And if the earnings growth continues to remain between 15 to 20% for the next 2 years, then I think given the fact on an average we are slightly maybe 1 or 2 multiples higher, it doesn't seem as if it's extremely expensive for us to expect a sharp downturn. And that's the point I'm making. So at best it will consolidate. And if earnings continue to remain buoyant and the environment of business changes in this country and the uncertainty goes away, then I think there is, earnings growth coming, and then the prices will reflect that as well.
Okay, that point is taken. By the way, a couple of stocks surging. IDBI is now up about 9%. That's an exclusive flashing on the screen. We'll just get back to that as well. And also, keep an eye on RCF. Yesterday, there was that news of getting that bonanza of development rights after many years. Of course, the market was weak yesterday, but that stock also seeing quite a bit of buying momentum right now. So that's also interesting. Tushar, this last year was also about the cost of capital rally. We had small cap index rally about 60%, mid cap index rally 48%. Even if mean reversion has to take place, don't you think we could be in for one more round of capitulation in the mid and small caps?
Again, as I said, we don't think we can predict whether it is going to happen or not happen. It may happen, but will it sustain is the question. I mean, if you have a reaction for a day or two or a month or so, I don't think that is a permanent derating in the market. And that's something which I don't think will happen. Will it have a reaction based on some external event or something which is even internal, which suddenly sends a shockwave in the market? It is likely. But if you look at the breadth of the recovery, if you see the kind of earnings growth across industries that we are seeing now, it is very unlikely that this kind of momentum just suddenly stops in between and turns and reverses. So I think the case to be made is, for now, what we are seeing is that earnings growth has been fairly patchy. So you've seen certain sectors which have demonstrated very significant earnings growth, and there are certain sectors which are actually struggling, like the banking sector, for example, as well as some of the companies in the infrastructure space which are really struggling. So what we tend to see is a little bit of a contrast between things which are not doing very well and things which are doing extremely well. So we find it difficult to kind of come to a common conclusion. But as the economy changes and all of the bottoming out of the situations in the public sector banks, for example, start to sort themselves out, I think it is very, very important to focus then on the fact that the entire synchronicity in terms of how the sectoral earnings growth starts to move is something that we have to watch out. So the risk is really not how bad it will get. The risk is that we become complacent, saying that the market may either not go anywhere or it may actually come off, and it might surprise us on the upside. So I think staying invested through the volatility is probably the most important thing at the moment, because we don't see much fundamental reason to get worried. Interest rates are slightly higher, yes, but they are peakish. Inflation, again, as the RBI has said, that it is not really expecting it to shoot up.
Sure.
Liquidity is fairly comfortable. So I think on the whole, it appears that the fears may be high, but I don't think fundamentally there is so much reason to get worried.
Okay, that's good to hear, Tushar. For the last 4 or 5 days, we've heard so many reasons why the mid-caps should fall and tumble and maybe even crash. Good to hear that you don't expect so much. Thank you very much indeed for joining us. You're also joining us on a day when the markets are in a cheerful mood, 1% higher on the mid-cap index, but it's the IDBI Bank stock that should be on your radar. That stock, as Anuj just pointed out, is up 7.5%. At this point in time. It had seen, of course, a very big fall, and today is a very important day for this stock. Indeed, for the insurance sector, the regulator, IRDA, will be meeting, and probably one of the items on the agenda is whether LIC will be given the nod to buy IDBI Bank, buy that 40% odd and make it a 51% holding. Yash Jain, our correspondent who tracks insurance sector very closely, is with us. Yash, tell us timing, agenda, everything else that we need to know.
Well, Lata, as you rightly pointed out, the board of the insurance regulator, that is IRDA, is likely to meet at around 11 o'clock today to consider that very crucial proposal of LIC picking up a significant stake when it comes to IDBI Bank. Now, before we move to the kind of approvals which will be required for this particular transaction, let's just understand what this transaction would really look like. So what I've been given to understand from my sources is that LIC is likely to pick up an additional 30% stake in IDBI Bank, taking its overall shareholding in the bank to about 40 or 41% from the shareholding of 10.82%, which was reported by the end of March quarter. Also, what we are given to understand is that this particular transaction is likely to be executed through a preferential issue of fresh equity, which will be given to LIC. And also, very importantly, LIC might be given 3 board seats on the board of IDBI Bank. But the most crucial part is what I'm given to understand is that it may not get management control by the virtue of this particular transaction.
It would be a very complex transaction, it seems. What are the other hurdles that the deal could face, Yash?
So, Sonia, 2 very crucial hurdles which really one needs to look at. The first one, as I mentioned, that the Insurance Act restrains any insurance company from investing more than 15% in a listed entity. So, LIC would need an exemption when it comes to that particular 15% ceiling of investment, because its shareholding will go beyond that 15% to 40% from what the transaction looks like. So, that would be the first hurdle. And the second one, most interesting one, IDBI Bank also owns 48% when it comes to IDBI Federal Life Insurance. If LIC picks up about 40% stake in IDBI Bank, it also gets a stake in the similar proportion when it comes to the life insurance entity. Now, of course, the Insurance Act also restrains a same promoter, individual or promoter entity to have more than 10% stake in 2 same stream insurance companies, and the Act gets violated as far as this particular transaction is concerned. So that exemption from being a promoter group in 2 same stream insurance companies is also likely to be granted today.
Okay, thank you very much, Yash, for all that. All the regulators have to bend backwards. The IRDA has to shut its eyes to the fact that an insurance company is taking more than 15% stake in one. Yes. It puts the policyholders' money at risk. It has to shut its eyes to the fact that it will own another insurance company, which is the Federal IDBI Insurance Company. The SEBI has to shut its eyes to an open offer. The RBI normally doesn't allow someone who owns a bank to have more than 5% stake in any other bank. And as we know, LIC has so much of a stake in Corporation Bank, in Axis Bank. So everybody has to come with munificence. I don't know.
And you know why? I tell you one thing. I don't know why people are chasing this move on the upside.
Exactly.
It's actually negative news. For the longest, the deal in the market was that could IDBI Bank be the next Axis Bank, right? I mean, if it's sold to strategic investor, if it's just a transfer of stake from the government to the LIC, exactly. In that case, I mean, with a 27% NPA, if you're chasing this move and, tomorrow you're stuck and the stock goes to 40 or something, you're still to blame.
Oh, absolutely. I mean, as Damodaran was telling us, the former SEBI chairman, if you have a problem child, does it become less of a problem child if I hand it over to you? I mean, it is still a problem child. So, I mean, exactly. But I think there were too much of shorting of IDBI. So this could just be short covering. I don't think anyone is taking investment positions. 81% stake between government and LIC already. So, there's not too much by way of minority investors in this stock. Well, with that preface, let's now shift to our corporate radar and get some corporate heavyweights into the show. The stock in focus is NALCO. It hit a 52-week low earlier this week, having lost 35% from its November highs. As well, both alumina and aluminum prices have been volatile and actually falling. Mr. D.K. Chand, Chairman and Managing Director of NALCO, joins us to give a sense of how FY19 may shape up. Good morning, Mr. Chand. Thank you very much for joining us. First, if you can tell us about the trend in alumina prices. You've had some very lucrative shipments when you last spoke to us. What has been the trend? Have prices fallen on alumina shipments?
But last tender, we have got $481, and which is around $7 to $8 more than the previous tender that was $473. So we are finding that though the prices have come down from 700 level to 470 or 480, still the prices are quite good, and it is quite comfortable. And as we see the aluminium market, still the global market is running with deficit, and it is expected that in 2018 around 8 lakh ton deficit will be there. And along with that deficit position, there is also a cost push factor from the side of caustic soda prices have, latest prices are 15 to 20% higher. So these two factors will keep the alumina prices firm in the market, that we expect that it may move somewhere around 450 to around 490, and we have got the latest tender is 481, and the tender nature we found that the competition is very high. Few of the competitors are at the level of 478, 475. That means it shows that indicate that market is quite firm, because others are also equally competing for the H1 position.
Okay, so the range will be $450 to $490 on alumina prices, and the last shipment was at 481. What about aluminum prices, Mr. Chand? How much have they fallen lately, and what could the range look like over the next 6 months?
Yeah, aluminum prices have considerably come down, because as you know, the sentiment that was driving the LME, particularly this sanction against Russia, that has almost vanished, and that has a strong impact. And during this month itself, in June, aluminum prices have come down. LME has come down by $180, and it is hovering around now 2170. But if we see the quarter totally, their average is coming out to 2246, which is around $200 more than the last year's average of 2045. So, if we look at the aluminum market, that also will have a very, particularly in Q3 of 2018, aluminum market may have a deficit of around 2 to 3 lakh ton, and with continued firm of the price of alumina around 450 to 480, 490, and also carbon prices like city coke and calcined petrocoke. So we expect that the aluminium prices will move somewhere between 2150 to 2250.
Okay. Mr. Chand, the rupee should be, the rupee's fall should be beneficial to you, isn't it?
Yeah, but for every dollar fall, we get a benefit of around $156. 156 crores.
Crores, okay.
Yeah, yeah.
So, I mean, I know these are things which are very volatile, both alumina prices and the currency. But nevertheless, what can we pencil in by way of a revenue growth, and what can we pencil in by way of an EBITDA growth, you think, this year?
Q1 of 2018-19, we have made some estimate that up to now we have already got an average price of realization in case of alumina 550 and above, because all the high value alumina shipments have been lifted. Already we have done 10 shipments. And similarly, in case of aluminium, the average realization is 2,300 plus, including the premium of 90. So with a moderation of 20% increase in input cost, we have calculated that our EBITDA margin will be somewhere around 31%, and the PAT is almost going to be more than doubled of the last quarter.
Okay. No, so in Q4, your overall operating profit margins were at about 17% odd. What can we expect over the next 2-3 quarters?
This quarter already, our Q1 will be 30% EBITDA margin will be there, and the PAT will be doubled. And next quarter it will depend, because we are expecting that if over the year alumina average prices remain around 450 and aluminum prices remain with including premium around 20 to 50, then we will have a EBITDA margin of around 22%.
Okay. Finally, sir, before we let you go, can you tell us what's your capex, what is your debt, and how are you likely to use your free cash? How will your debt move?
Yeah, our capex program this year is 1,100 crores, and we are having a cash balance of around 3,500 crore, and we are utilizing this thing in our new alumina refinery, which the work is in advanced stage progress, where will be a capex program of 5,400 crores is there. In addition to that, we are opening a coal block. This block will be opened by the first quarter of 2019. So there also 500 to 600 crore we are putting the money there. And one wire rod mill also we are putting, because of the market demand of the wire rods. There also will be requiring money, and we are also acquiring land for our brownfield expansion of smelter and the power plant. So whatever surplus is there, that will be consumed there, and then after consuming that thing, we'll have also internal accrual. What we have calculated that in a year we may be having around internal accrual of 1,000 to 1,200 crores. Balance of the thing, if it is required, will be borrowing.
Sure, sir. Thank you very much, Mr. Chand, for joining us and spending time with us this morning. We have to take a break on that note. Up next, the government has increased the carpet area of houses under the Pradhan Mantri Awas Yojana